Okay, folks, welcome back. We have our first losing day. Well, it hasn't really ended yet, but it still could end up with a net loss day. Had two positions this morning, trading euro, and I'm not going to go over the details about that because I'll take up time. It's going to be in the recording, and those that were live, you guys saw that anyway. I do suspect that we've swept out a low in here. Now, Monday typically is for me, it's a dicey day, okay? And today was exactly that. I got tripped up with the London Open, even though my analysis was looking for a higher dollar. This real close high had me a little too concerned. I know somebody tweeted saying that the stop may have been okay, but there was no indication that was going to happen, so I felt justified by canceling the short. The fact that I'm watching this order block down here, because if I can get that retraded down into without getting too much of a run for these stops up here, that's what I'm going to be looking for, just so you know. Trendline Phantom, we'll talk about that as well. I think we probably need a significant low for the first half of the week in here. So I think we're going to make a run for the stops above here and close in this little gap at 108.40. Show you this chart maximize. You can see what I'm showing. Took the stops above here. Ran those and we've receded since then. They kept this high intact, so I'll come back with that later on, but I don't still see it today. All right, so we are inside the series of down candles in here. The expectation is we're going to see expansion, clear the stops here. Potentially, maybe, run up here and close this gap. Now, my positions today were one standard lot on each, and they round off at 2% each. So I have a 4% drawdown on the account. I am not permitted to take a full standard lot trade until I get back half of what I lost. So that means I'm stuck at 5 minis until I can get 2% back. Then I can go back to trading 2% risk on a full standard lot. Can you hear me? I got a guy saying he can't hear me. Okay, thank you. It's the loss mitigation concept. I have a teaching on that. Should be in the pre-tutorial section. The idea is when you have a losing trade, and like today, I had two back to back, same day. So the idea is you don't want to start a string of losses with the maximum willingness of risk each time. You want to trim that back because it has a psychological effect. Whether you want to say you don't feel anything about it or not, you do. The natural impulse is I want to get that back. I don't want to have my account show a loss. If I can come back from it, it'll show I'm a really good trader, yada, yada, yada. You'll have all these internal dialogues going on. And the idea is you'll start thinking that this is the last trading day of your career, and you have to have it back. You don't want to end your career on a losing day. So the reminder that is the setups occur very frequently. They're reoccurring. So because we don't know when our next loss is going to be, that's always going to be an uncertainty. The certainty is it's going to come. And we don't know if it's going to be a series of losing trades, and we don't know the impact of our psychological makeup during those losses because everyone's going to take them differently. But I don't want to talk too much about that because I can use all this commentary at the end of the trading day. I want to really focus on an opportunity because if I do get a chance to at least mitigate half of what I got, that's what I'm trying to do. Yeah, I'm going to have to. So we're inside the down candles here. All down here. 1, 2, 3, 15-minute candles down. The expectation is we're going to see movement higher. So what this is called a close proximity entry. Okay, the expectation is we're going to see expansion. We're in the area where the smart money would be buying. Okay, at a later time, when price is up here somewhere, this would be a bullish order block that we would expect the price to trade down into and maybe recapitalize. Well, if our understanding is we're seeing expansion or potentially expansion, and we're inside the range of these down candles, we can still be a buyer. Now, when I buy this, I have to have a stop below 55, so it's going to have to be a 30 pip stop. Again, notice I'm using 5 minis. I'm not using one full standard lot. So inside of the buys of these down candles still. And I'll explain this once I get my stop and stuff. Just give me a second. Okay, so I'll leave the profit open. I'll manage it as I go. Hard stop is at 30 pips. Okay, so we're expecting movement through. Old low here, violated, down. We've since come back above. Dollar has already swept its longer term daily stops up here. Some breakdown. I want to see this area on the dollar give way, and then we'll come down and hopefully get to this 99.25-ish level. Hopefully Draghi can talk that down. Cable. I'll just give you a peek here. I was wanting to buy this earlier, but I wasn't able to get this live setup done in time. Yeah, you're seeing a trend line. High. Everybody's going to, retail's going to want to be selling it here. And this is called a trend line phantom. It gives you the impression, retail, that this is so easy. A caveman can do it. Let's get short. And then obviously you can see what's going on. They're going to be making a run for the Sunday's high up here, 125.90 to 125.95. Could spike into 126 big figure. So we'll come back to that. I don't want to leave this on here because then all of a sudden people will be sharing charts. Michael, still, look at this. This guy's doing trend lines. I use trend lines as a contrarian indication. I don't look at them to trade off of. I look where they can fail. I knew Huddleston used trend lines. I can hear it now. They'll be screen capturing everything. So again, the expectation is we saw price blow through the Sunday's low here. And let's look at the range. And I'll tell you what that 107.55 level is in a second, but let me just note this. And if I don't mention what the 107.55 level is in the next 10 minutes, just prompt me. I have the questions tab open, but that's not an invitation to ask me a million questions right now because I'm focusing on trying to mitigate what I took as a loss today. So while I am talking, I do want to focus on this low here. Price traded through that low, and now it's showing an unwillingness to go lower. Okay, so retail traders are going to see this as a trade on support, broken, should be resistance, and didn't go lower. So my expectation is it's going to run to where the liquidity is. Where they're going to be at, above these equal highs. And if we get some momentum, goes up in here on that 108.40 level like we were looking for this morning. The hard part for you as a trader, and admittedly for me as a mentor, because I already know some of you are very new, and maybe today was the first time you took a trade, which you shouldn't be doing. You shouldn't be doing that right now. You should be actually just practicing on a demo account. But nonetheless, if you took that today, or both of them actually, there's all kinds of wonderful chemical releases going on in your brain today. Oh no, here it is. It's finally coming out. This stuff doesn't work, or ICT can't trade. Trust me, I know what that feels like, and I already know that's what some of you are thinking. So there's not going to be any words that I can say to actually change that. And when you feel that, the only way that's going to be removed is if you see the next trade win, or if you see the next couple trades win. And I know that. That's the same thing I needed as a trader too. So the only thing I can counsel you is don't entertain the thought processes of toxic thinking. In other words, don't question whether or not the concepts work or they stop working, or that the IMF is in my room. They very well may be in here. I'm not saying I would know that. Who knows? But I'm not going to be arrogant and say that they are. But I do suspect that some of you are going to have a little bit of a shock when you do, and you did today. You see me get it wrong, and there's no excuse. There wasn't no hidden agenda in here. I literally read it wrong. And what's worse is the analysis was right on the dollar, and the levels and the direction initially we were looking for was right, but I executed wrong. And that's the part that you're going to have a mess up like that as well. And it's not going to be the only one. It's going to happen again. You have two choices. One, you can dwell on it and beat yourself up about it and keep yourself from taking the next trade, or you can learn from it, just move on to the next trade. So where was I going with that? I was going somewhere. Oh, So we have risk here defined. So we have 2 to 1 potentially if we get up to 8 at 108.40 level. If it doesn't, there's no guarantee that it will, but if it does, that's what we're looking for. We'll try to trim some of this risk when it gives us an opportunity to do so. Now, if we can move ahead and get above these equal highs and maintain that as we go into the Draghi speech, I'm okay, and I'm actually comfortable holding that all the way up into 108.70. Yeah, if we get 108.70. So let's talk about why that level 107.55 was on my chart. You can see it on the daily chart to the left. Let's go here and maximize this. We got to a weekly. I wish there was a way I can keep this box from going exactly where I need it not to be. The little questions box you guys use to communicate to me on here, it's always in the area where I don't want it to be at. All right, so we have this old low here, right in here, on the weekly for the euro. And then on the daily, we have these bodies of these candles in here. It's almost like these things know exactly where I needed to look for data. Then we have the bodies of the candles here. So rounded to the nearest 5 level, that's this here, 107.55. And we have the low on that wick on the weekly chart at 107.17. We're close to it. So that's the top of the range we're looking for. And it swept into that today. I got to a daily again, or am I already on that? Yeah. If you look at the dollar, this is to answer your question, Ricardo. Ricardo's asking, don't understand why I'm trying to buy euro. We've swept price, we've expanded. Look how many days we've had up. We have 1, 2, 3, 4, 5, 6, 7, 8 days if you count Sunday's action. All up. Now I understand Trump's election and the whole thing, okay, but we've already cleared down the area of liquidity, and it's realistic to expect some measurable retracement. I'm not trying to capture the high. I'm not trying to capture the low on the euro. All I'm trying to do is take a trade. That's all I'm doing. So there's no overemphasis on my part to try to sell the idea that I'm trying to capture a significant higher low. All I'm looking for is a particular range to unfold. And because we've already seen such a movement on the upside, I'm less leery to be a buyer in here now because we've cleared so much ground. Now everybody wants to be a buyer. It's so obvious that everybody wants to be buying the dollar, so we have to basically allow the dollar to cool its jets. And unfortunately, sometimes that'll consolidate or retrace. Either one allows me a long on the euro. The fact that we went below this low here, trading it here in London, I'm viewing this as this is potentially the London low and the low of the day. So we created the low during London. Hang on one second. I just realized I had a space heater going the whole time, so it's probably what you've been hearing. If you heard the kind of background sound, I apologize. Should have got real clear, didn't it? I'm looking for basically a reversal setup, yeah. But I'm trying to counsel you and not trying to sell you on the idea that I'm trying to capture the reversal on the long-term charts. That's not what I'm not selling that idea at all. That's a good question, John. John's asking what makes me think this is not a continuation sell. Is that what you're thinking? Or why you're asking? Why isn't this a sell? That's what I was trying to outline a moment ago. The fact that we took this low out, which we see here, it came up, it should have already ran lower. The fact that we came back above the body of this up candle, in other words, this should be a bearish order block. It should have came just to this level here, maybe up to here, and then went lower. That's what I would have ideally expected. Because we've given up this range here, to me, I'm viewing it as them tipping their hand, saying, no. We want folks to want to see this as a potential sell. They're going to have all their fibs on it. Optimal trade entries and stuff will be here. I'm not viewing it like that here. I think there's a lot of liquidity up here. They got real close. They built a lot of trust in that level. So anyone wanting to go short here, they're going to have their buy stops right above that. So they may give a little bit of a range here. I just hopefully don't come down and hit the stop. That's not what I want to see happen. But, anything can happen. But if it does expand, they're going to be looking for these stops up here. No, I traded in London too. I didn't trade just now. No, it's not a test to do anything. As part of the mentorship, my commitment was I was going to try to trade every single trading day, but because of the election, I didn't trust the analysis that I would have on the price action. What's odd is during the election, I was spot on, and now after the election, I'm having issues. So basically what I'm showing is to take a trade every single trading day, this is what you would encounter. So I'm giving you a read on how I would see price every single trading day. But this morning's setup, that was a nice one, but I screwed that one up. Good morning, how are you? What's happening today? Well, today's a lesson in humility. All right, so this is not looking good. They will not relent on that dollar. Now price is starting to act stupid. This doesn't make any sense now. This is not happening today. It's not going to happen. Do you believe I am wrong for a third time? Power 3. That's a good one. Yeah, they won't let that dollar go. They're holding it firm. Dollar made lower lows. Euro failed to make higher high. Yep, I'm offside. Yep. Had to take it off. Hold on 1 second, guys. Yeah, I'm muting. I didn't like the fact that we made the lower low on dollar. And at the same time, should have seen a higher high, which is what I was expecting to see. But because I didn't get that, this lower high, that's a cracking correlation. That means the dollar index came down for stops. And this was unwilling to make a higher high, so there's no strength here. That would be rather what you would expect to see. But that way, if the dollar makes a lower low, your dollar should be making a higher high. It didn't do that. What I was trying to buy and why I bought there is because assume for a moment that we saw price do this as expected. This is what my anticipation was on price. Say this candle did something like that. And it wouldn't be that color now, would it? It'd be green. Okay, so say we saw price trade higher, maybe not even that high, say it did this. Okay, we would reasonably expect to see what if this would have happened in price, okay, and came back down into this down candle. That would be a buy, correct? Based on order block analysis. So the belief is that if that's what was going to unfold, that's what I was trading on. I was expecting them to run the stops here. But what killed it was the dollar making that lower low. It didn't happen. So oops, sorry. Thought I hit the mute button. What I was saying was, is if price was to expand up like this, and we expected price to come back down that at a later time, we could see that as a bullish order block or a buy. Well, if we see that, we don't have to wait for that all the time. So if my expectation was, if these are down candles before I don't move, I'm comfortable if I have a strong conviction. It doesn't happen all the time, but if I have a strong conviction that the market's going to make a run for a specific level based on liquidity, I will buy inside these down candles because I'm basically trying to replicate what the smart money would be doing, accumulating in a down move. Problem is I didn't see the continuation in price action with the higher high in euro when the dollar made a lower low. And I'll show you again what that looks like. On a 15-minute time frame, dollar made a lower low. At the same time, the euro failed to make a higher high as it should have. And that's what I was waiting for. When you sat and listened to me, what I was pondering is whether it was going to come up and give me that higher high. Because if it gave me a higher high, then I would have held on to it and waited for the dollar to break down. Because it did not give me the higher high on the euro here, this is actually a break in correlation. So it was actually showing underlying weakness. Does that make sense? It's basically SMT divergence. If you've been through my tutorials, you'll know what that is. So every time I get into a trade, I'm watching and monitoring that. Whether I say it or not, sometimes I'm not going to remember to do it, but that's exactly what I was watching just now. And because it didn't give me the higher high in the euro, I always try to give it a little bit of time just to see if it will happen. But when this candle started coming down, it's just not likely at all. Yeah, the dollar's going to try to push again. It's difficult sometimes to trade when it's so screaming one-sided like it is on the daily. And today was an example how you can be easily punished by trading against it. But unfortunately, I don't feel comfortable trading it long at these levels up here because there's nothing to support the idea except lower time frame. And I don't like to have the trade set on the lower time frame only. $100.50 if we trade to that level, it'll be interesting to see if they lose ground there aggressively, or if we just get a monster rally through that. Good morning, Steve. You haven't responded to me yet, by the way. Now that I caught you, you need to tell me right now while I have your attention. When do you want to do the panelist session where we can talk about the difference between what you learned back in the late 90s and how you're learning from me now? But to answer your comment, right here, let me put up the chart so you can see it comparing. Okay. Yes, Steve, you'll need a microphone, otherwise no one can hear you. you have to speak through a microphone. If your computer has a built-in computer microphone, that's fine. But if you don't have that, you'll have to have an external mic. In case you're wondering who I'm speaking about and who I'm speaking to, it's a gentleman that used to work with me in my AOL days, when I thought I knew everything, but I didn't know as much as I thought I did. And I would love for him to be able to contrast the level of education I'm giving now relative to what I was doing back then. All right, so what I was watching and why I nixed the trade was the dollar making that lower low here. They ran stops below this low. How do I know that? Because there was no higher high seen on the euro at the same time. This should have been a higher high than this high here. That would be market symmetry. But there is a lack of that. So we see this as stop running on sell stops and underlying weakness on euro. So if I'm long here, it's not good to hold that long anymore because it wasn't able to give me a higher high, which is what should have been seen with this lower low. So whenever the dollar is making a higher high, foreign currency should be making lower lows. And we didn't see that here, and that's why we're seeing price fall out of bed now. I've already mentioned why I don't want to sell. It's too far ahead, and this could just be a false rally up into the middle of this up candle. It's in a level I don't want to be trading at long. I'd rather capture the reversal or do nothing. One of the pluses by doing this today is, number one, obviously you can see that you're going to encounter if you trade every single trading day, you're going to have this happen. And you're going to have, these are my tools, these are my things that I've been using for a long time. And you've seen it today, 3 times in the same day. So I'm not allowed to take another trade today, regardless of how good the setup is. I'm not permitted rules, I can't do it. So I have to sit on my hands and do nothing but watch it. But the ability to be able to see it happen, understand why I'm collapsing the trade to avoid a larger loss, and understanding why it should be doing let me say it this way. Understanding why it's doing what it's doing and how that affects my outlook on the marketplace. It protected the full stop out, which is, again, I slept through the remainder of London when I took a second long one, Euro. I went to sleep and I allowed the full stop. But the previous trade, we protected the stop, but it never would have got hit in some people's eyes. But I don't believe that would have been the case. I can't look at that and say that was going to happen for me. And at the time, it could have very easily spiked up in here and cleared this high out. So that's real close. I don't like to see it get that close. Just static alone, the spread or whatever, your broker could have opened it up easily and taken you out. So I'm not going to beat myself up about that. What I am a little bit disappointed in regards to my execution today was my initial outlook on the dollar and the euro and cable. They were right, but I allowed the short-term volatility to change my bias on the day. So it would have been much better. I'm thinking out loud. These are all things I actually put in my journal that will be in my journal today. But the salient points that I'll be having in it is the fact that I did not stick with my original analysis with looking for the upside on the dollar to that 100 mark, and then only focusing on the shorts for foreign currency. And I paid that price with 2 losing trades going along. And the charts I'll include in my journal will be like you're seeing here. These are all indications of what you would have, hopefully, like I just did here, saw that I was offside, so I had to correct myself immediately and protect capital. Otherwise, it would have been a full stop out again. Dean, I see your questions. Is the dollar index always right? Could it be that the dollar should have made a higher high, or did you use cable to confirm? Well, the dollar's always right. Dollar's king. Either the dollar's going to move up to allow shorts in foreign currencies, or it's going to move down to allow longs in foreign currencies. But they can hold it in consolidation and still permit foreign currencies to move against it. All of the, see your question regarding yields and interest rates and such, Jay. That macro view, I'm allowing a little bit of time from the elections because there's a whole lot of sentiment being built in right now, and I don't trust the long term right now because it may be shifting, it may be changing, and we may be just seeing a patriot run or rally in the dollar, and it could just wash out. So there's a lot of things I'm weighing right now, and admittedly, this is all. Well, I guess for lack of a better word, it's rather difficult for me to get a good read on price. So that's why I'm keeping it really, really short term. And I've mentioned this over the last couple of months because of all the uncertainties out there. I'm real comfortable staying in the lower time frames and not being too ambitious about my objectives. And today, even that didn't help. You can use the yields for short-term trading, but it's not necessary now. Well, Raj, you're saying that you thought trading was going to get easier after the elections. Well, my activity level is going to increase, but the easy part, that's going to be relative to whatever, It's easy when we get out of the trade and look back and say that was painless, but we don't know for certain it's going to be like that when we're trading the trade. Yeah, we're going to be in one just about every day unless I tell you otherwise. All right, so we're making a run on the initial high. $1. What's cable doing? Yeah, it don't make any sense there. I do not know what cable's doing here. Yeah, good morning, Adam. I was going to have a session at 10 o'clock, but I changed gears because I thought I had an opportunity to take some action this morning on the New York Open. And I've since been corrected. How often does it happen for me to get a string of losses? Well, if I trade every day, you're going to see a lot more losses than I normally would have. But that's all part of the mentorship. You're going to be able to see, how you deal with the losses, or how I deal with them. Let's put it that way. It's not my interest, again, to inspire you to trade every single trading day, but I want you to. You'll learn things by watching me trade, whether they're profitable or unprofitable. You're going to learn things about price action and why I'm doing certain things. And if I encounter resistance or drawdown, you'll see how I actually go against and mitigate that. Because even if I do trade a lot less frequent, I still get losses. I just don't do as many losses as you're going to absolutely see with me doing so. I don't want you to focus on primarily the level of accuracy. That's not what we're focusing on. What we're focusing on is the application of the concepts and where these concepts do their best work. There's going to be days of the week and times of those days that certain concepts are going to work better than others. And by your involvement and immersion in that, you'll be able to see what suits you better. Because it's going to be, there's three primary setups that I use. One of them you're going to gravitate to. It's going to make so much sense that you're going to not worry about the other two. And you're just going to say, okay, I like stop runs. I like turtle soup. Or I like, trading back at fair value makes sense to me. Or, the bullish or bearish order box. And again, looking at the examples every single day and getting a read on price, you'll see why I elect as a professional trader not to do everyday trading. I'm very selective on when I trade. And the problem is you want a tutorial, or you want me to be able to tell you in a paragraph setting, this is what I do to avoid all the less likely trades. And there's really no way for me to teach that outside of just showing you every single trading day what it's like doing it. And then all of a sudden it'll become clear. But it has to be experienced. And I guess that's what I'm saying. You have to see it happen. And then it makes sense, obviously, after that. But it can't be shown conceptually. And that's why you can't learn it in books. I can't write a book and teach it. It has to be done over my shoulder showing you in charts. This is what it looks like. This is what happens. And if this happens, this is what you do. And because we don't know, you never know what the price is going to be. It's always going to be dynamic. Yeah, I would. I'd be a little leery too if I was on here claiming I never lost. That's a good point, Andreas. But you'll see once you understand what you're going to be trading in as your personal model, you'll be highly selective in your trades too. And by doing that, your trade frequency is going to drop off a lot. And if you were comparing it with other people, it's not going to look awesome and sexy because you're a very passive trader. And there's nothing wrong with passive as long as it's net positive. By the end of the year, you need money. That's great. Breakers are, I think that's in Market Maker. I don't know which video it is though. If you tweet it in the group, someone will help you because they're more organized in terms of where that stuff is actually in the tutorial sections. All right, keep an eye on the dollar index. It's still making a run for that dollar. What is this? 07 level. So far, the optimal trade entry guys are right. It'd be funny if I go on my public access Twitter and they got the optimal trade. I sold short here, ICT, thanks. Meanwhile, I'm in here, I tried to buy it. Scott's saying Market Maker Series Part 5 is mitigation blocks. So hopefully that helps you. Is that what I'm actually talking about, the breaker, Scott? I apologize. I have so much content. I don't know exactly where everything is. This is not a 10 o'clock webinar. That was something later, different. I was going to do another session. How does losing affect one's psychology when trading large accounts for clients? Are there different rules? Well, it depends on whose psychology that you're referring to the affecting. Is it going to be you as a trader, as the manager, or the clients? Because I can tell you, clients are never happy when they see money going out of the account. Okay, the trader psychology is the same as we've been talking about here. When you're trading a larger account and you're managing other people's funds, you have to really dial back the leverage. You got to dial back the risk, and we got to be like under 1%. You can't be trading more than 1% per trade. The client base will not tolerate a lot of swings in equity. They won't allow it. They won't stomach it. You'll be inundated with people wanting to know where you're at. Why is this happening? And imagine that. Imagine if you were managing a fund and you had, say, 100 people in it. Okay, and I'll just throw that number out there indiscriminately. But just say, for instance, you had 100 clients out there that you're managing funds with, and they have access to your information. They're asking, where are we at today? And they're really invested in wanting to know the day-by-day fluctuations. It's all part of your prospectus. You don't want to be giving them that access right away. You don't want them to be worrying you, because there's nothing more unnerving than knowing that you got other people's money at risk, and the success of them having profit is your ability to think clearly. So you're never going to think clearly if you know you have, well, there's no real nice way of saying it, but impatient, unrealistic, unreasonable investors. Okay, they think every trade's going to go in their favor, and the account should go straight up, and they're millionaires. You want to be able to build in during your prospectus that they will absorb some drawdown, but to keep it in realistic terms, and it's favorable for them, they can tolerate it. You can't take trades larger than 1% risk. You can't do it. So that way, it allows your equity base to be a smooth curve up, but it won't be a dramatic like you see with me doing with a MyFX book where I'm doing 60% month returns. You can't do that with large funds. And if you're thinking you're going to do that, you need to stop that right now, because no one's going to allow you to do that. As soon as you do it 1 month and you can't deliver the second month, it's over for you. You're never going to be hearing the end of it. What's happening? Why aren't you doing as good as you did last month? All those things will have an effect on your psychology as the trader. And if you're the managing trader of the fund or your other people's money or your own account, it's like when you tell your spouse. The worst thing you can do is tell your spouse what you've done. You're going to tell her or him that you made money today, or you made money yesterday, or you're up for the month. But you won't tell them you lost money, because you know what's going to happen. They're going to start asking you questions, and you know how you're going to feel if they ask those questions. And some of you know this is the fact, so you're never going to say it to your spouse, because you know the what-if scenarios. And because you know that what-if scenarios are going to potentially be there, if you tell your spouse, they're like your trade partner. Okay, so now what you're doing is you're beating yourself up, and you haven't even revealed anything to them. So now you feel guilty about it. So you have all these psychological impacts on there. So that's why either you're the manager or you're not. And if you're managing, that information is for you to worry about, no one else. So you have to keep that clear. And when you sit down with clients and you manage the funds for them, before you even receive the money, you just got to be real honest and say, look, we don't do monthly updates. We do on a quarterly basis. And every quarter, you'll get a rate of return and performance report. And by spacing that out, it gives you a great deal of, comfort zone. I mean, you just don't want people worrying all day long. You can't focus. You can't think, because you're going to be worrying about what that person's wanting to do. Is he going to call me? Is she going to call me again tomorrow? They're going to be asking for their money out when you've already explained to them that you're locked in for a specific time. When you set your fund up, you have to have a clear, defined terms of when disbursements are made. All those types of things are outlined. And much like people in mentorships and subscription programs, they'll pay the payment they get in, and if they get a little bit of a adverse experience, they're immediately looking for the exit ramps. Oh, this isn't for me. Well, did you think you were going to get in the trading world and never absorb a loss? That's the problem with the industry, because it's been sold that it's perfect. So you're going to have that barrier as a trader that's managing other people's funds. I have that more than anything. And when I was assisting other people with their money, that was the worst experience for me, knowing that people had access to me and worrying every single day, either by phone call, voicemail, emails, constantly asking, why didn't the rate of return be as high as the previous month? And why are we less active this month? And the smartest thing I ever did was saying, look, we're going to quarterly updates, because I can't focus. I got so many people wanting to know why it's not performing as it did last week. Who's managing the account then? It's not you. It's the emotional customers, the principal. Okay, if the principal is telling you how you should be trading, then you shouldn't be managing their funds. Give the money back to them. Let them manage it. So yeah, and that's true, man. People are never going to be satisfied when it comes to money. And I'll be honest with you, I'm not going to say any names, but you know who you are. And I'm not upset. Okay, I get it. But the dynamic changed as soon as I put a price tag on this. If I would have did this in a live setting and it was just on YouTube, your commitment or the attachment to it emotionally and psychologically for me having 3 losses would have been, well, I feel good now. I take a loss, and so does ICT. There's no problem. But now it's not that easy because now you're paying a premium to be here watching me do this. So it changes the dynamic. Whereas before, you'd be very patient where I would release a video whenever I wanted to. Now it's like if I'm 5 minutes late, what's going on? The link isn't working. Everything changes. So when money's involved, just understand that there's a great deal of paradigm shift that takes place. And that's why it's very difficult to manage other people's money. In my opinion, that's the hardest thing to do. What's wrong with the cable going down with the dollar up? Obviously, it's going to do what it wants to do. I don't like it. I don't like that setup, to be honest with you. I like this order block here. That's why I like the 2480 level. So if it goes down to this candle here, I'm going to be expecting it to find support to press up and close in this range up here. That's why I got this highlighted here. This is bear's order block. I think we're going to try to make one more run up. Gold and silver, I don't have any opinion on right now because it's completely washed out. So I'm on the sidelines for the metals right now. Well, I don't have to do that anymore, Cliff. Cliff's saying that, I'm sorry, not Cliff, OMFX. I'm not sure what that, OMFX. Demanding only a report once a year, like Warren Buffett did. I don't manage other people's money anymore, so I don't have that problem. I have a new problem. I have 800 plus people to keep happy. I didn't have 800 people as a principal. I had far less involved in the fund. The reason why I'm not short is because I've already used my daily allowance for trades. So I've executed 3 times today with no positive return. So I have to stick to that rule and exercise patience and control. It's a measure I had to employ that when I was a younger man on Miracle Online. I did a lot of trading where I did a lot of trades. And sometimes, and it was very, very few and far between, sometimes because of that excessive frequency in trading, trying to get back losing trades, I would come back and either get my loss back or make a positive gain on the day. And of course, my ego would be huge. I'm better than I really am, or thinking that I'm better than I really am. But it happens so infrequent. You only need one of those to occur to want to keep doing it again. And I learned a very painful lesson and lots of money being lost that if I have 3 losing trades in the same day, I got to pull the plug. I can't do it. Because number one, admittedly, what I'm thinking right now is I'm not connected. I'm not dialed in. I don't feel like I have a beat on the market. So it took a number of years for me to develop that and force it as a protocol. I can't trade again. And honestly, it's very painful, when you have to trade with that rule and you see the setup, you see it, you see it there, but you remind yourself, hey, look, I thought I saw it before and it didn't pan out. How much can you get at one daily range? That's the question I force myself to answer. In one daily candle, how many setups can you get? There's not a lot. Preferably it's like one really good one or two, maybe London and New York. But outside of that, if you burn your your ammo, if you will, on 3 shots and you get nothing out of it, you got to wait. You just got to simply wait. And subscriber based, things like I'm doing here. If you're a new trader, man, this is like a mind screw for you. You're like, man, this isn't what I expected. You're already writing emails, getting ready to send it to me. This is not as described. And it's one day. So if it may not be 3 trades for you, some of you may have a little bit more willingness to absorb more losses and maybe trade with less risk. So it permits you a lot more trades. But I'm over my threshold for the day. I can't trade anymore. So it doesn't matter how good the trade setup is. I'm not allowed to execute. And the person in control is me. I'm holding myself to a level of accountability. I'm not permitted to take another trade for this trading day. As soon as Asia opens up tonight, I'm allowed to trade again. But I'm not really active in Asia, so now what does that say? I can't really expect to take a trade until we do another London Open. And this is such a minor amount of pips. It's such a minor amount of percentage. It only takes one good setup, and it's completely erased and have a whole weekly expectation in terms of what I normally have as a target still stack on top of it. So, I understand, and I'm not reading anybody complaining here, but I already know what you're thinking. Some of you are thinking, man, I did this trade. I took this trade, and, I don't feel comfortable about this. I'm paying money, and now I just paid money out of my account on a trade that I was following. I don't like this feeling. And now you're going to think about this all day long. It's going to eat at you. And you can either say, you know what? It's unrealistic for me to expect a 100% hit rate. You have to have a willingness to absorb losing trades. It's going to happen. I promise it's going to happen. There's the run on the euro low. You seeing that on the dollar? Not yet. Almost. So dollar has yet to make the higher high while the euro did breach its low. Cable still holding at that 2480 level. CAD's a heart attack still, not making any sense. They keep coming back on dollar CAD for all the trailed sell stops, and they keep pressing it higher. Eventually, one of these moves, when they take out, and it could be today, really. I mean, it's going to be just like this too. I'm not allowed to take any trades, so they come down and clear all the stops out, and then it'll vault, and go up to the 138s. So there's that low in the weekly chart. We noted at 107.17. So they'll probably wash that out. In other words, trade through it. I got to remind myself sometimes, you folks that are in other parts of the world may not understand my slang. Okay, dollar should press through the high now. I'm not sure if I was in mid-sentence earlier about something and got distracted, or if I completed my comment, but yeah, it's my Baltimore accent. I put an R in what would be otherwise wash out. I say wash. I was raised by basically Virginians and a guy from Pennsylvania, my grandfather. So I got that as my slang, or what it would be my. The word escapes me. What does it mean when? Yeah, you got vernacular. That's it. Down the ocean on. I don't say that though. I always make fun of people around here saying that. All right, we have a run on the high on the dollar index. Finally got through that. Now, are we seeing at the same time acceleration on the fiber? Yes. So we'll be looking for 107.17 to be blown out. Humility. That's the focus today, Michael. Learn from it, son. Learn from it. Yeah, cable's not making any sense to me. I got no problem admitting it. I don't think that this pair knows what it wants to do. That's nice market symmetry right there. Notice how we made a higher high on the dollar relative to this old high. We made a higher high here. At the same time, we have this old low, and it's made a lower low on euro. That's how market symmetry should be. In other words, when you see that, it's confirming. So in other words, this is permitted to go higher for the dollar and lower for the euro. It doesn't always happen that it justifies continuation, but you don't want to see what we are seeing here, where the euro is making a failed higher high. In other words, it made no attempt to get higher than this old high here. At the same time, it went lower here because everything is inverse. So if the dollar's going higher, foreign currencies, euro dollar, should be going lower. If the dollar is making a lower low at the same time that the euro doesn't make that higher high, it's showing underlying weakness here on this pair, and this is a potential stop run on sell stops. And you obviously you can see the post price action. Adam, I don't know why the cable is not making any sense. That's why I don't have any opinion about it right now. When in doubt, stay out. That weekly low for euro dollar is 1 pip away at 107.17 on this data feed. Dollar index, remember we're watching 100.50. Let me scroll this down, you can see. That's the upside objective for dollar. Here's your weekly run on the low on 107.17 euro dollar. Score 1 for the optimal trade entry. ICT 3, 3 losses in the same day. Yes, fibers are low resistance liquidity when I mentioned that in London, making the run on the lows like that. No, I don't think that it's a magic number for you personally to adopt 3 trades as a maximum for the day. Again, it's all going to come back to your personal risk tolerance and what suits you. I mean, I'm trading at 2% risk on the trades, so that obviously doesn't give me a whole lot of trades to take if I'm wrong. But if you're trading at like half of 1%, you can do a lot more trades than I can and still be within a reasonable amount of risk for the day. If you're trading with 30% risk, you need to be in Las Vegas. Casino time. All right, comparing the dollar index and pound, would you say that the pound shows strength? British pound showing strength. That's basically what I was saying earlier in terms of why I think that 2480 level should be support, because I think they're going to want to take cable higher. And we should be seeing euro pound higher. I thought I had a chart up here for it, but I don't now. And actually, we're not. Now, why did I say that? Good grief. I said that backwards. Euro's tanking and cables being held sideways. So it would be a down move on the euro pound. I said that backwards. No, Miguel, this isn't a test. Like, there's no like hidden agenda here. I promised you, you're paying for my time. So I'm trying to give you a read on what I see every single trading day. And because of that, I'm invariably going to have days where I read it wrong. I'm confident that I'll be able to mitigate the losses by Friday's close, but I can't guarantee that if anyone took trades, they're going to do the same, because you're probably already scared to take the next setup. If I was to say I'm going to trade tomorrow, you can be like, let me watch and see if this one's going to be right first. Exactly. And thank you for posting that, Joel. This is not a signal service. That's next year. And I can already hear the complaints. Why don't you give me a trade signal every day? Well, admittedly, the question I was just asked is how am I feeling with 3 losing trades in the same day, knowing that there's people watching?
Well, there's always people watching. Whether you see my trades or not, that's always in the forefront of my mind because I do the stuff that I teach, but I don't trade every single trading day. So by having a very selective procedure about when I take trades, it reduces my frequency, and that lowers my loss count and keeps me at a high accuracy rate. Not that that's my goal. I don't like being in trades, and I've said this before. Being in the market is a lack of control, and my personality is I have to have control. So when I have control, it's in the analysis portion, which is why I love the analysis part of trading. But the actual execution and being in the marketplace with exposed risk, I hate it. I don't like it. I don't want to be in it. And I don't think anybody really does because it's an uncertainty. We don't know. We don't know what the next move is going to be. We don't know what the outcome of the trade is going to be. As soon as you enter the trade, it's over. The control aspect is only in your hands to the degree where you can collapse the trade or your stop losses hit or your targets hit. And that brings the end of it. So what I'm feeling is the same way I felt when I was in my internet relay chat room when I was doing live signals for the S&P. When I was making wins and everybody was seeing that, everything was great. It was, salad days, easy. It was great. Everybody was high-fiving each other. It's great, wonderful. And it's like any other time when you have a poor performance, you're going to have folks that are going to be emailing you and asking you what's going on. Is this system broke now? Does this stop working? Are they trying to stop you from making money? Is your broker screwing me now? No, it has nothing to do with it. I was wrong. That's all it is. It's wrong. But what I'm thinking is I already know some of you that are so new, it's going to have a great deal of impact on the rest of your day today. You're going to be thinking about all day. You're going to be dwelling on it. Why did these trades not work? And why didn't I see it as this? And why was I saying the market should do this or that? And it didn't do it. So it's going, in that part, it's going to be a test. Not that I intended it to be a test, but it's going to be a test for you. Do you take the ability of assuming risk and then assuming that risk and then taking that loss? Does that change your conviction about wanting to be a trader? Because if it does, trading's not going to be for you. And no mentor, no teaching, no system, no nothing is going to help that until you allow yourself to say, okay, well, look, I'm going to have days where I don't make money. I'm going to miss opportunities and I'm going to lose. Yeah, I'm just reading the comment. If I do signal service, I expect 100% guarantee accuracy. Yeah, they happen. So to answer your question in short and sweet terms, I'm always concerned that you as the subscriber will make more about one trading day's performance than reasonably should be made. So, but I understand how it was as a new trader too. So I already know that the likelihood of getting fear-based emails saying, look, I'm not sure what's going on, or you're probably going to be reluctant now to send the email because if you've traded live funds when you're not supposed to be doing it yet, that pain is going to be more for you. And it's going to be a psychological barrier for you now because when we do the next setup, you're going to be thinking, the last 3 trades were losers. What makes this trade any different? And then what's going to happen is also you're going to go in and you're going to start picking apart and critiquing the setup instead of trying to learn from the setup. The feedback that you get from the price action. See, what I'm trying to do is I'm putting you nose into the chart and saying, okay, based on what I understand, what I know, this is what I think the market should do. If it doesn't do those things, Okay, obviously I slept through London and allowed the full stop, so I can't do anything about that, and I was willing to take that loss. But when I'm in the market live, if I see things that don't make sense and I can describe them to you, and I collapse the trade, you learn a great deal from that. You don't make money from that trade. You don't make money from that experience, but you learn a thought process about why I'm doing the things that you otherwise can't learn. I can't write it in a book. I can't show it to you in a video where it makes sense, but as I'm doing it and seeing it and live describing it, that's what I wanted to know. I wanted to know what makes the trader, like, this is what pissed me off when I would see people that made, profitable trades. When we were on American Online, it was all message boards. So it was kind of like forum-based, delivery. So when I would read these folks, they would show their trades, and they were real trades. I mean, they would show E-Trade statements and Linball Doc and Fox Investments, all the brokerage firms that were out there for futures and stock trading. They would put their screenshots up there, and this is before Photoshop was around and all that kind of stuff, where you would clearly see this is what it was. And I would always ask them, hey, look, why wouldn't you have been shaken out by this or that? And they wouldn't tell you. And I found that very problematic for me as a developing trader, because I felt that that's what people were hiding from me. The people that were making money, they had some secret performance protocol that they used to see when these losing trades were. They start off, obviously, everyone thinks that the trade's going to be a winner, but then when you get in there, what are those characteristics that show the trade no longer being a winning trade? I did a lot of work with that initially in my trading because I was fearful. I was 100% fearful of taking a loss. I didn't want to lose. And because if I lost, I would be accountable to my uncle. I had to tell him, look, because that was the person I made accountability to. I would show him what I was doing with my trades. Initially, it was the greatest thing I could have ever done, but then eventually it became the worst thing I could have ever done because it became a psychological arm wrestling match where, as soon as he would tell me his opinion on the marketplace, me being a contrarian is I'm going in, I'm looking for a reason to do the opposite of that. And sometimes it was right, but then sometimes it wasn't. So what was really driving me? The fact that I wanted to be different than him, not the technicals. I was justifying my stance based on the assumption that he's always going to be wrong. Broken clocks right twice a day. So if I could go back in time and tell myself what I know now, it would have been this. When you see the trade that you're in and you see the warning signs that it's not going to pan out for you, the first time you get that feeling, immediately view where your stop loss is and then cut that in half where that would be in terms of stop. If it starts trading on that, don't even waste any more time with the trade, just collapse it. Because if it's going halfway to your stop, it's going to be very easy for it to go to a full stop. And if you're feeling reluctant about holding that trade, if it's going halfway to what you're willing to assume in terms of a loss, and the technicals don't show any indication that it's turning around. Now, mind you, I didn't know SMT diversions then. I didn't know any of those things. But what was the defining moment for me to change what I'm actually doing when I'm in a trade? The only control I have is knowing when I want to hold it and when I want to bail on it, when I want to get out of it. And the other two terminus of that is my profit being hit or my stop. So either the best outcome is my profit is hit, or I'm going to take a full stop. I don't want a full stop. Even though I'm willing to take it as a catastrophic loss, that means if the market spikes against me, I'll take that as a loss and say, okay, I was wrong and it's limited to just that. But when I go into a trade, I'm actually trying to manage not losing that full stop, but still having the potential of making that full profit. And it takes being in the marketplace, seeing it being done, explained why, because every pattern and every day is going to be different. There's going to be different things that, I guess, provide the context of why these things would happen. But there's a generic theme that goes along all of them. But again, it can't be conceptualized to such a broad brush idea that, hey, look, this is how it's done all the time. You have to see it experientially. And once you do, it'll make sense to you. It's kind of like, like I don't like golf. I tried it in high school. I just couldn't hold the golf putter right. I couldn't do it right. I just couldn't do it right. And I don't have the patience for it. And I had kids in my class, that would get up there and just nail it all the time and get real close to wherever they were trying to aim it for. And it didn't make any sense to me how they could keep doing this stuff. And because I didn't have the patience to go through the skill set practicing of it, I already knew. I committed the fact that I don't want to do that. So why waste my time? But if you have that inspiration to be a trader, you're going to have to go through this process of grinding through it. And it's not always going to be a positive return. The negative return is actually a very profitable learning environment. All right, so we're going to see Draghi come in here and have his effect. I didn't mean to offend your affinity for golf, Jacob. I'm just saying I just don't personally like it. I like lacrosse and soccer, but outside of that, I don't like sports. Yeah, cable is not looking good. I don't like the fact that we went down below the order block here, this down candle. Even though I'm willing to see it go down to this candle's high, 124.36, so basically 124.35, 124.40. That's like the line in the sand, if you will. If we lose that, it's going to want to go lower, and we won't be looking to trade up into this range. The question is, when I was taking the trade, was I watching the weekly euro downside objectives? I was aware of them, but I was expecting some pullback and expectation of whatever Draghi would say. Yeah, I don't have any opinion on CAD. I just think, well, I guess I do have an opinion if I'm going to say something now. I don't have a position on CAD, but I do suspect that they're going to drive it higher. I'm waiting on Steve to confirm he has a microphone before we can set up anything. It wouldn't be today because we're already long in the tooth with today's session. First impression on today's bias. that I should have stuck with. Well, I have to be careful about what I say about my opinion. The question is how can I not have an opinion about any instrument? You can be neutral, and that's kind of like where I'm at with everything now because I can't take any action. The more I talk about the setups, the more anxious I feel because I am human. I see the setups that would potentially be there, but I don't have the permission based on my rules to take any more trades for today. So I don't want to sell the idea of or inspire anybody to take something that I myself can't take. I appreciate that, Mike. I'm not beating myself up. I'm not sulking or anything like that. I'm responding to a lot of people's comments and questions. I'm on to the next trade in London. I'm not worried about it. Yeah, the trend line. The trend line I had on pound dollar. Let's go back. Let's look at that again. And that actually, well, when you see what the condition is for the setup for false trend lines, this would have been a failure too. So if I would have taken a fourth trade, okay, let's say I would have taken a fourth trade, that would have been a loser too. That would have been a loser on the pound dollar. So I would have lost money on the other one too. So that would have been a really bad day. Which is, again, another testimony to why I have to have a limit. At what point do you draw the line? I mean, there's some people out there that teach and such. They'll say, you got to trade your edge. You got to do your next setup regardless. You got to take the next trade. Well, I guess it's true in a sense, but how many of those edge trades do you have inside of a normal trading day? And that's where my work has taken me, where I got to cap it somewhere, and I think 3 is it. It can't be more than 3. And why don't we focus on euro pound? There's not always something in euro pound. If the dollar is delivering very clear message that it wants to go somewhere, I'm going to live there. When the dollar's uncertain, then I use euro pound. That's an interesting question. Would it make sense for them to do a liquidity play run now at 3 p.m. and reverse to create upside liquidity for tomorrow? If I were in control of price on the euro, what I would do personally is I would send it higher right from here because we've already taken the low out for people that were trying to capture the low. They're washed out. So those sell stops have been washed. So if they've taken price below that low with no advancement or dynamic momentum going forward past that low, in other words, we just went below a little bit and now we're already coming back. Personally, I would have expected this to be a lot more aggressive as it moved below it. It hasn't done that. So they may be out here collecting the sell stops. And if they're going to collect the sell stops, what does that imply? They're accumulating long positions. So if they're going to accumulate down here, where would they want to distribute those longs? Up here. And I know it's like a broken record, but I see that level back here, and it just looks so obvious that they want that level built up and a lot of trust in it. So we could see, in my mind, I'm thinking, if I had control, I'd make a run on everybody short, because think about what they've done here. They had a low that they've taken price down to. Below it, they bought up some more. Take it down as below this low, they bought up more sell stops. So now they have hedged in longs here, here. So if they make a run on the buy stops here, here, and up to the gap, they have a logical area where they can unload that and make a book and also hedge against the down move on the euro dollar. But I've been wrong 3 times today, so bear that in mind. I'm just saying, hypothetically, if I had control over price, that's how I would deliver it, because I could facilitate market making. I would pair orders to where logical buyers would be after accumulating the sell stops. I would have been wrong 4 times, Connor. Would have been. We're going to stick to facts here. I was wrong 3 times. If I would have taken the trade on cable, that would have been a loser. Didn't you use euro pound before to determine what euro and pound dollar was going to do after looking at that? Yes, but when there's specific conditions, like there's going to be times where you don't necessarily lean too much on the dollar because it's going to be in a consolidation. So you have to lean on the euro pound to see where its liquidity is, above or below, and that'll give you the potential play on what currency to trade. Because if, for instance, dollar's in a consolidation, which it's not now, but say it's in a consolidation, and you just feel like the euro is going to go higher. Well, if that's true, then euro pound is going to have either a void it wants to close in on the upside, or a stop run that could potentially be running above an old high, while cable has nothing really bullish right away. And then euro pound suggests that long in euro dollar is probably going to be favorable, while dollars in consolidation. When consolidation is seen in US dollar index, you have dollar neutrality. So with that underlying basis where the dollar can not move higher or lower with any great deal of magnitude, it doesn't negate trades that can be made in foreign currencies, long or short. It just means that you have to do more analysis with their crosses. And it's the same way with the Japanese yen. When you're looking for the Japanese yen to remain in a consolidation, but the euro and pound look like they can potentially go one way direction or the other. The same thing unfolds there by using the pound yen or euro yen. Aussie dollar hasn't made any sense to me either. Like I said, the markets are digesting a lot of things. They were worrying about whether or not Hillary's going to put us in nuclear war with Russia, whether Donald Trump is going to export all the Muslims and block, the Mexicans with a border wall with no drive-through. And the bottom line is there's a lot of things that everybody is basically trying to figure out, just like we are. There's a lot of things to weigh out. Admittedly, it's not easy right now. It's not easy at all. But in the coming weeks, it'll smooth out a little bit. You just got to give it time. Yeah, I hate to say it, but I think Donald Trump's going to get shot, and I'm not wishing for that to happen, but I just don't see him getting in the office in January. And I won't say that in public forum on YouTube, but that's my personal belief. He's just not a skull and bones kind of guy. So if you're not in that clique, you can't be part of the party. Well, I don't want to turn this teaching into a political discussion. I want to kind of keep it on the topic of technical analysis. But I can certainly talk about that stuff in my free forum. So far, we've not seen anything except for the same. This type of price action in here, where we have consolidation, it rallies and comes back into the consolidation, I find that more favorable for me to trade when we haven't moved so far in one direction, like we've seen on the dollar. The dollar index on a daily basis has been screaming and it's raging higher. And I just don't want to get too bullish on the dollar. And in other words, I don't want to buy it at this level. I'm more willing to see a reversal pattern. And unfortunately, reversal patterns have that price sometimes you got to pay. And just too many up days in a row for me and for my personal taste. But once it gets to 100.50 basis the dollar, then things can get really interesting, because if we blow through that, man alive, we got some real issues to contend with, because it could be running a lot higher than I thought on the dollar. Larry, I'm not sure. I'm asking, your question is why wouldn't we see this euro dollar as distribution? Referring to what specifically? Yeah, I don't want to buy cable. I don't want to buy it. I think it's going to punish me if I did it. And I can't. I'm not allowed to do it today anyway. But you're asking me a question about why would it be a good buy? I don't want to buy it. I personally, this is my thought process, and there's been several of you have been asking about my view on equities and S&P and the Dow and NASDAQ. I don't like the fact that we're seeing this raging dollar rally, and the Dow made it higher high. It doesn't make sense. There shouldn't be a run to the dollar if equities are bullish. It doesn't jive. So. When I tweeted this on my public forum, I had some jackass say, well, you just revealed something that every trader has an understanding of. Well, that just showed the scope of his understanding. The point is, if we're looking at equities, okay, and my expectation is we were looking for a higher high before they crash it, because they have to build in this idea that we got through it. We got through that uncertainty. We got through that. We have a new president. We have this and we have that. But in the meantime, behind the scenes, they're paying for people to go around in cities, busing them in and paying them $1 wage of $19 to $21 an hour to protest against Trump. So if you have to pay for them to do it, there's not enough of them to do it on their own. And they're doing it to upset the whole thing. They're causing unrest. So I believe that, and the fact that the Federal Reserve is just screwing all of the other currencies by rallying the dollar, by doing that, we should not be seeing equities making new highs. They should be tanking, okay? And for the folks that did ask me in email, what my opinion is on S&P stocks and all that stuff. I've held true to, like I said on Twitter, I think it's going to crash, but it has to happen after it makes a new high. They have to build in this idea that, okay, it's okay, it's fine, and it's going to take everybody by surprise. When we just made this rally up and down, made a new high, historic highs, people are like, wow, why did this happen? Where did this come from? Wow. Well, we were talking about that happening. That was the most probable outcome to see. But S&P and NASDAQ didn't follow suit. And I haven't seen equities today, but hang on one second. Yeah, S&P and NASDAQ haven't made any equal high yet with the Dow. So, to me personally, I think this is a lot of different things. The dollar, folks are running to the dollar because they're probably unloading their stocks as the market's making that high. They're unloading it and moving it into dollar-based protection, I guess. It's like the quality type thing. And couple that with the fact that, the dollar is going to rally to put pressure on Russia, to put pressure on other foreign currencies. And like it or not, we're the Federal Reserve, we're the global, leader in terms of currencies. We make or break most backs in the global economy. So we muscle everything. And we're seeing a relentless rally on dollar. They want this thing, they went over this level here. They definitely want it there. How much above that and for how long, I don't know. But it certainly wants to get up there. And we've called 102 to 107 on dollar and parity on dollar and euro and pound. That's the long-term landscape. But we have to trade the now right now. We can't trade, what can happen in 24 to 36 months. If the dollar is rallying, that's going to send gold lower. If the dollar trades lower, it usually is a bullishness for metals, and especially gold. They're inversely related. I don't know or even begin to anticipate what the ranges would be like if we go to parity between euro and dollar. But I believe it's going to be exciting as we get closer to it. There's a lot of talk and drum beating about World War III and this and that and other thing. I think if we see parity on euro and the dollar, then I think that's when World War III could happen. That upsets the currencies again. That upsets all the whole world. But ultimately, I think that's where we're heading. I don't know if it can be timed with a Black Friday. I don't know anything about that. But I suspect it'll happen on a weekend where no one can do anything about it banking-wise. That's usually when they do it. When and if you knew you were on the wrong side of your dollar long, why not reverse and short since you'd be shorting at discount? The number of trades I've already taken today keeps me from doing that. I've already used 3 of my trades, so I can't. I know that doesn't make sense for some of you that are new. Like, what don't make any sense? If you're going to trade, take the trade. But by my experience, if I'm wrong, I can be wrong again, like you saw today 3 times. I don't want to see proof that I can be wrong 8 times today. I don't want to see that. Yeah. Well, this is a long, long day, and without the outcome that I was aiming for. But with 12 months of this, this is probably going to happen again. So get yourself prepared for it. Here's the lower low on cable. Yeah, admittedly, that I would not have sold that. I can look at this with all kinds of hindsight lipstick all I want, and I would not have sold 25.45 to 25.50. I just wouldn't have done it. Wouldn't have done it. But to answer the question I just mentioned earlier about this failure, if I would have had that as my second trade, I would have reversed there, admittedly. I know I would have done that, but I can't do it now. Because it's too late in the day, too. I've already used my 3 trades for the one trading session. When they bring parity against, with other currencies, it's ultimately controlling world and global economies. Yeah, well, let's just say this. Draghi has yet to say anything to upset what's already been in motion today, which is not what I expected to see happen. So, all across the board, I was wrong. So, I have to pull the plug and just save my powder for another day. Good thing is we have Tuesday tomorrow. We will be looking at Tuesday's London Open again. No, I'm closing the session now, Paul. I'm just giving you the final credits. The video that we did this morning for London, plus this one, I'm going to just compress it into one big long video. So it'll be a blend of what was talked about in the London session, and then we'll segue right into the same video to this video here. So it's going to be a little bit long, but it is what it is. I mean, we're going to have short sessions going through the London session. It'll be kind of like what we did last night, but a lot less time. I'm going to give you what I'm expecting. I'm going to give you the contingency plan. If this doesn't unfold, this is what I'll do. And if that doesn't work out, then the idea will be waiting for the New York session. So I'm going to give you tonight, again, we'll sign on. I'll go over the charts, tell you where I think the market may look to go for objectives, the daily bias, and we'll take another stab at it. But until then, I'm going to close this one here and grab me some breakfast. Just, the takeaway is you're going to get it wrong sometimes, Don't beat yourself up about it. Don't make more than it needs to be made. And just get ready for the next trading day. And limit your losses. You have to do that. Because what happens is, in the closing comment, if you don't limit your losses, then there's no limit on how much you can lose. You can lose 2% over 16 trades if you allow yourself to do that. And every time you take a losing trade, you're going to be that much more hungry and thirsty to get that money back right away. I'm not in a hurry to get that money back. It's such a small objective to get back in small terms of percentage. I don't want to compound it and make more work for myself. I want a day I've already read wrong. So the battery life on this day is gone. I'll have a new battery and a new trading day tomorrow. And I still have the weekly range ahead of me. So I'm not trying to force anything. And that's the lesson I'm trying to teach you today is, yes, I was absolutely 100% wrong on my outlook after changing gears from wanting to be bears. I was wrong. If I submit to that and go into the next trading day, I'm okay. I'm not worrying about rushing to get back to my old equity high or upset about my stats. I'm not worried about stats. I'm worried about, am I net positive? Am I profitable? And am I in control of myself as the trader? Because if you're not in control, I'm not going to help you. Your spouse isn't going to help you. Your broker's certainly not going to stop you. If they wanted to stop you from losing money and controlling yourself, they would limit the amount of trades you can take in a day. And the last time I checked, a broker has an open policy with you wanting to get into a trade and you got equity in your account. Come on in. They'll love for you to come in. So the takeaway today is limit your losses. Know beforehand how many times you can trade, regardless of what the setups show. Lick your wounds. Don't beat yourself about it. And then go into the next trading day with another fresh outlook and no remorse, no toxic thinking, no, the last 3 trades were losers. Because if you think that, it's going to be a barrier to you taking and executing on the next setup. You can't do it. But we will be trading with less risk. Okay, I'll still trade at 1/2 or 5 minis. If I take another loss on that, I have to drop down to half of that. And then I'll live there until I get back all that loss. So you'll actually see me do the very thing I teach in mitigating losses. So until I talk to you later on tonight in the London session, until then, I wish you good luck and good trading.